Hello, everyone. Welcome to my channel. My name is Anna Nesterova. And today I decided to make a little bit of different video. I decided to step out of my regular topics about medical device industry and healthcare related products, projects, and talk about more general matter of business and how the business world will look like in this interesting era, let's call it, era of COVID pandemic, because many things are changing. COVID definitely changed the way how business was run before, and the changes will last. And I decided to invite the person to my show who can share his experience and his view on the situation. And I am very happy to introduce my special guest today, Scott Sinclair. Scott is the president of Sinclair Range and a turnaround expert with more than 30 years of experience in investment banking. Scott is also the creator and the host of the YouTube channel and podcast channel, which is called Martinis with Scott. I will be more than happy to share the link for his YouTube video and a link for his podcasts below my video, so you can go and check it out. And we potentially will even have this video on his channel as well. I think it's a great collaboration for us just to talk about business, because I participated in Scott's projects before, and now I'm happy to have him joining mine. Scott, thank you so much for joining me today.
I'm so happy, my friend, to be here. Thank you for having me, and it's a great honor. Should be fun.
Yes, thank you. I would like to start my interview with a quick question. How many companies at the moment you are running and in charge of? Are you the CEO of 9 companies? I actually lost count.
Yeah, I can't always remember myself, but the important ones, they're all important, but the ones that are active on my day right now. So Sinclair Range, which is an investment company, predominantly an advisor. So we buy troubled businesses and turn them around, like a private equity fund style, except we don't have investor money. We lend to troubled businesses, and we consult to troubled businesses. And so that's one. And we have offices in New York, Toronto, and Calgary. I'm founder and president of that. I am president of Roofers World out of Ottawa, which is an owner of that as well, which is a designer and producer of tools for the roofing industry, which we sell through the Home Depots of the world, predominantly in North America. I'm owner and president of Devani Stainless, which is a stainless steel sink manufacturer I bought last June 2020 as a troubled company. And that's in Ontario, Canada, and sells probably in Canada, but a little bit in the US. We're going to the US market. I'm president of Globex Extraction out of Loveland, Colorado, which is a hemp processing facility that I didn't own. I owned a little piece of it, but I was brought in to be president of that company. I'm president of Interim Finance Corporation, which is a specialty lending arm. I don't know how many I'm up to right now, but I'm just trying to recall off the top of my head. There's a number of other sort of hedge fundy type companies in international jurisdictions we don't know to talk about, but they're not sort of on my daily radar. Those would be the ones where I'm actually managing people and trying to create value, as opposed to them being vehicles for other things.
Well, just based on that, I think people should just understand the credibility of the person that, joined my conversation today. And the question that I have for you, I'm sure you will be able to answer it from such an extensive experience that you have in so many different areas and different industries. And I think the question many people are asking, right, is what is going to happen with businesses and industries in the future? What's happening right now? And I think from what you just described, I hope you can share your opinion through the lens of your expertise in so many different industries. Yeah. So, and I'd like to, start with a question. What industries do you think will not going to make it through this? They will not survive under pressure of COVID. And what industries and businesses most likely will? And from what you see in the companies that you are dealing with. And I actually would love to in the future to ask you a couple of questions about those trouble companies and why they got into trouble. Was it COVID
Sure.
related, or it's just the poor management? But I guess let's start with that simple question. What industries do you think will make it, and what industries most likely won't? And why do you think so?
I, I guess I'm rejecting the premise of the question from a macro perspective. I think there's lots of businesses that won't make it, but are there industries that won't make it? For example, if you're sitting likely in Calgary or in Alberta somewhere, and if your favorite restaurant has been shut down more or less for a year, is that business going to make it? Maybe not. Maybe that business isn't going to make it, right? Is your airline going to make it? Is the cruise ship company going to make it? Or are they going to go? And what does make it mean anyways? In the restaurant example, it means that, did they end up going bankrupt and lose their lease because they haven't been paying their rent?
Yeah.
Right? That business didn't make it. But did the restaurant go away? Did the industry go away? Because if you wanted to start a restaurant today and you could step into that lease at half price or 2/3 of the price, if you could get that $100,000 of leaseholds for free, because it's already sitting there and the landlord has something to do with that space, might be a good time to start a restaurant, right? Maybe not today, but maybe 2 months from now, it might be. So the industry doesn't go away. People want to go out and they want to eat, but the business went away. And I would try to frame it that way. There's a difference between the macro question and the micro question, okay? Now, clearly there's global trends going on. And so some industries are going to do better than others, and some are going to suffer and have a long time coming back. But I'm not one buying into the idea that industries are going away. I think that's an oversimplification.
Okay. And can you give us an example? Can you give me an example of those potential industries that have a bit of an advantageous position right now in this time?
Sure. I have to say, Anna, that on my show, we drink martinis. And I didn't know if I could do that on yours. I was ready to open one up. But
definitely.
I would, if you want to think about winners and losers in terms of industries and not, not at the micro, at the business level, it's easier for me just to think about trends and whether you buy into trends. So for example, the work from home trend, right? So remote work is clearly a big trend, whether you think that's going to last or not last. So we're going to end up with some sort of hybrid in between. It's clearly driving winners, industrial winners. Okay. So for example, think of technology companies that reduce friction for remote work. Think Zoom, think Microsoft Teams, think, the social media apps, like we run Sinclair Range on Dropbox and WhatsApp and Zoom predominantly. So the tech companies that deliver those sort of services are exploding. Think about your internet providers, the pipe to the home to get you the bandwidth. Those companies are going to be doing very well. Think about home deliveries. Think about home improvements. Two of the companies that I own and run are essentially in the home improvement space, right? Tools for roofers to do renovations, stainless steel sinks to beautify your home, and the do-it-yourself and all that sort of stuff. Those companies are exploding. I mean, they're 50% up in 2020 over 2019, and 21 is up again another 30% so far, right? Because you have to sit at home. You're going to start thinking about spending money on your home to make it a little nicer than you used to.
Definitely.
There was an article last week. I think it was last week. I read in the Wall Street Journal with interest that there's communities in the U.S. like Tulsa, Oklahoma, some places in Idaho, Arkansas, that are writing people checks to move to their communities. $10,000, $12,000, $20,000. Here you go, Anna. There's $20,000 to move to this town. From where? From New York, from LA, right? Because they're trying to, they're latching onto this trend of remote work, and they're trying to get people into their communities for the tax base and the real estate prices and all that sort of stuff, and to support their local industries, right? So those are some winners. And what are the losers? What are the losers from the remote work trend? Clearly commercial real estate,
Hmm.
right? The office spaces in downtown New York or LA or Toronto or wherever, that's not a good industry to be in right now. Hotels, autos, you're not driving to work anymore. Anything going on in the big city, if people are moving out, is going to be a loser industry as long as that trend survives. So if you think that trend is forever, there you go. If you don't think it's forever, well, then you want to be careful about that.
Yes.
What other trends are there? Well, the lockdown trend, right? So lockdowns are lasting for at least a little while.
Hmm.
You know, and in where we are from, they're exploding, right? There are just more and more cases of COVID, and therefore more lockdown trends, as you know. So what's that driving? Home entertainment, social media, home improvements again, communications pipe again, direct to consumer, right? A huge trend. So any business that's got direct to consumer, which brings in deliveries, and who's losing? Travel, retail shopping with a footprint, bricks and mortar, events, shopping malls, right? So you can think about it that way in terms of the big trends. What's another big trend? Fear, right? Just media-driven fear about predominantly your health, number one, and social trends, number two, right? Those are huge issues. And so on the health side, what does that mean for industries? Well, your industry in particular, right? Medical devices, medical technology, telemedicine, big pharma, small pharma, biotech, like all that stuff.
Yeah.
I think is hot. Mental health. Anything to do with mental health is a huge industry, right? For both reasons, both for the whole social fear side and medical fear side, and anything to do with social media and news, because you know why they're peddling this fear is because it drives clicks, and so it's being successful, right?
100%. No, I completely agree. Actually, and I think this trend overall created a couple of new, well, maybe not so new terms, but more current terms that people are starting using more and more. For example, those technologies and companies you mentioned, I think many consulting firms, they're referred as companies that they are specializing in digitally enabled productivity. So I think that's the term right now that they're using. So anyone who makes that online, whatever it is, but online driven simplicity for companies, for business, even for people individually, those companies will be winners within the next couple of years.
Could you give me an example of that?
I think, well, as you said, like Microsoft Teams, for example, right? They made it easy. They enabled the productivity for companies, for larger companies.
Yeah.
I'm not sure how much you can make it more efficient.
I think they enabled perceived productivity.
Yeah,
right.
probably.
They reduced the friction for sure.
Yeah.
Right. We're on Zoom right now.
Yeah.
Right. We couldn't have done this 3 years ago.
Oh, yeah.
Reliably.
I agree.
Right. It just wouldn't have happened. So we've reduced the friction. Am I going to, before COVID, I personally was on a plane 3-4 times a week. Am I going to do that anymore? Maybe not. Maybe I could cut half of that out with this type of technology.
Yeah.
Yeah.
We'll see. I guess we can only guess right now, but I think 2021 will be definitely a year still for the online communication. 100%. And how did it work for you, for your businesses? So since the pandemic has started, and based on the nature of your businesses, they're quite different. Some of them are manufacturing, some of them potential, I don't know, some of them just financial services. So how did this work for your businesses in terms of not being able to meet people face to face and working remotely? What kind of technologies you've adopted and what worked? Maybe something didn't work, something you still find a challenge in running those businesses. Can you share that with me, please?
Yeah, the Sinclair range side of this has always been 80%. I just made that number up, but a significant portion has been virtual. So we have office space, but we don't always have people, or sometimes we don't all have people sitting there. They're out of clients, or they're just not there at all. They're working from home. And so we've always done that. And the technologies that we use to do that right now are Zoom, WhatsApp, and Dropbox, and Microsoft To Do, which is a shared to-do list that you can break into client files or project files or whatever. Those are our technologies. They change over time, and I know that there's other platforms that sort of combine all four of those things into suites, and you can, so that's just what we use. And so, but the point is, when the pandemic hit, that wasn't an adjustment for us. It wasn't an adjustment on the technology side because we were already doing that. And for the manufacturing companies, for the most part, they've always been essential. So people have been able to, we've never shut down, not a day. People have been able to show up. You know, our revenues have gone up. There was March, April, May 2020 was a transition. I mean, revenue was down 60%, just so nobody knew what was going on, kind of thing. But once it settled out, we were kind of fine. Globex in Colorado, that would have taken more of a hit, except that was a startup. You know, we were just building the technology at the time that COVID hit, and so my view was that was a positive, in a terrible thing to say, but that it was not a negative. Let's put it that way, from a pure business perspective, because it's hampering our competitors while we build up more of our technology. Didn't really change our business plan at all. I mean, we didn't start selling any product in that company until November last year. So it just depends. Depends on the industry. The real trick in my mind was when you're dealing with scarcity, when you're dealing with a crisis, which by definition is scarcity. As a leader in a crisis, you need to have your priorities simple and really damn straight. And my priorities, I told everybody, I covered this on Martinis with Scott a lot as well. My priorities were, number one, the physical health of our employees. So, you know, and you know, think back to March 2020 when you just didn't know what was going on, right? And so, you know, we put in physical distancing, we put in other measures, and you know, every company was different, but we didn't want our people getting sick and dying. That was priority number one. Priority number two was mental health, and mental health of our employees was eliminating the unknown as much as possible, creating certainty. And the certainty was around whether they could eat and pay their rent. They had some money, right? And so I wanted to make sure that money was either coming from me, that they had a job, or we were helping them get on a government program, which thank God we didn't have to really do with anybody at all. In fact, we hired a lot in the last year. We've probably doubled the size of our consolidated company in the last year. But that was a priority. And then number three is to use this as an opportunity to leapfrog our competition everywhere, right? Because in a crisis, everybody's paralyzed with fear. And so this is a good chance for us not to be paralyzed with fear and to jump ahead. And on that front, we've moved to direct consumer models. We've built those platforms in every company that I own. We bought Novani during the middle of a crisis when I couldn't even get up there and do due diligence. We've hired. We've launched a bunch of branding campaigns. We've done a lot of stuff to push us forward and to double down, triple down, quadruple down during this. And those were my three priorities, right? And I think I've lost entirely sight of what your question was, but the the leadership in a crisis is about being really damn clear to what's important to you, because you can't do everything. You just can't do everything, and you need a framework from which to make decisions.
Yeah, and that's fantastic. What you just shared is fantastic, because I think for people who are watching this, it's important to understand that any type of crisis always creates the opportunity. And it's a known fact that usually in some sort of a disruption, there is a time for entrepreneurship, for startups to start, like, to use that opportunity to succeed and to build something new. And like you said, leadership definitely plays the key role in this. And actually kind of lead me to my next question in terms of startups and companies you're starting during this time of uncertainty. What I usually hear on the news, when I read the news, I see a lot of companies, great technologies, trying to start during this interesting time because they see the opportunity, they see the gap, and they're trying to reach that gap. But majority of those news are coming from the US. And this is my perfect opportunity to ask someone who actually works in both countries, in Canada, in the US. But we are Canadians, and I would like to know if you see the same trend in Canada. Do you see the rise of entrepreneurship in Canada? Do you see the rise of startups in Canada, technologies, or you see that the US succeeds in that? What's your opinion on it?
Well, the US is 10 times bigger than Canada. But make no mistake, I mean, Canadians are very entrepreneurial. There's always an entrepreneurial, I don't know what word is, clusters within Canada. You know, they're not as well known, they're not as promoted as the US, but you know, there's millions of companies that are entrepreneurial in the US that you never hear about in the news, right? The news is just covering the ones that are promoted. There was an article, I think it was this week, it was either in the Globe or the National Post, I don't recall which one, about Canadian unicorns. And for those that don't know, a unicorn is a entrepreneurial company that's hit $1 billion market cap based on venture capital investment. And that's a lot of money. That's a lot of money. And there was a story of someone out of Western BC with an operating software system for law firms. So it's the sort of the backbone for operating a law practice that hit unicorn status. And, you know, there's been a bunch of others. You know, Canada's always had clusters like in Ottawa, Waterloo, Vancouver. You know, I'm dating myself, but back in the 90s, those were sort of the clusters for entrepreneurialism in Canada, tech companies, so to speak. And you need these clusters because successful entrepreneurial companies often come from spin-outs from other entrepreneurial companies, right? You have a large telecom company that's in the tech business, and then it spits out 3 people, guys or gals, who start off some other company with a better idea. And so you end up with these clusters and an infrastructure and a support group for the management team. But what Canada has lacked is a strong domestic market. I mean, we just don't have that many people. We've got 35 million people in this country. It doesn't make a market. So by definition, you need to be international to succeed as a company. And that's not true in the US, right? You have 10 times as many people. And so you can succeed domestically first, which is a big advantage. Our tax rates are insane. Our tax rates just, you know, are they're not as bad as they used to be, but historically they've just hampered any business growth ventures. And we don't have management teams with the experience because it's always been slow. It's always been, you know, not a major area. And capital, we don't have a domestic venture capital industry that's very strong. It's growing more recently, but you know, Canadian entrepreneurs often live and die as to whether US VCs are willing to cross the border or not. And that's a cyclical thing based on how their market's doing and how much capital they have available to them and all these sorts of things. So I think right now you've got a period where there's lots of US, I mean, tons of US money. It's clearly seeking cross-border transactions, which helps a lot. So, but you know, just because you don't hear about them, don't make a mistake and think there's no Canadian entrepreneurs. There's plenty.
But on a positive side, that for American investors, maybe it's a good idea to come to Canada, invest in Canada due to the Canadian dollar price right now, the rates, an exchange rate. Maybe that helps in a way.
But then it just changes, right? I mean, on a global scale, you know, I've always thought the Canadian dollar was like a microcap stock. It'd just be pushed up and down. It's tied very heavily to energy, whereas the US dollar is correlated very heavily with deficits and budget deficits and trade deficits, all of which are exploding. So one would expect the US dollar to decline, and the CAD tied to the energy maybe is going to stay not too bad. So
we'll see.
I think it's hard for a US player to base an investment on the foreign exchange.
Okay, that's really, I think it's a very good point and something for people to consider and think about. But let's move it to more of a positive vibe in terms of why and when is a good time to start business. And obviously, we already identified potential industries that will have that chance to succeed due to, again, pressure that coming from the COVID era.
Yeah.
Let's call it COVID era. And I just want to give people a little bit of insight in terms of, is it a good time to start if someone wants to invest in a company or maybe start a company, so they already have a little bit of understanding which industries will have higher chances to succeed. But obviously, like you said, it's not only about the industry, it's also about the business itself. And I'd like to ask you a little bit more and talk about a little bit more about those troubling companies, because you deal with them all the time, and what kind of mistakes people can avoid, especially right now in this tough time, I would say relatively challenging time. What kind of things they can do to prevent future problems, and what may help them to succeed in this time of, for some industries, uncertainty, and for some industries, opportunity, humongous opportunity.
There was a lot in that.
Yeah, I know. I guess it is a complex question.
Well, do you want to start with is it a good time to start a business?
Yeah, let's do. Yeah, let's separate. Yeah. Is it a good time?
It's always a good time to start a business. Like, why wouldn't it be a good time to start a business? And I think I'm always one to reject the macro part of any discussion. Like, is it a good time? What industry should I be in? And focus way more on the micro side. Do I have a better solution for something people need? Right? That's the micro of it. And if the answer to that is yes, if you have a better dog whistle, if you've got a better service, a better way to deliver something that people are buying, it's a great time to start a business. It's always a great time to start a business if you're delivering value today, right? And what you need to think about, I always break it down like this. How do you get in? How do you create value? How do you get out? And how do you get in if you're an entrepreneur is you need to think about how are you going to break into the market, and how much money is that going to cost you, and how are you going to finesse that? Is it a good time to hit the marks on those points, right? And then how do you create value, right? So I'm going to start a business, I'm going to build it for 7 years, and I'm going to sell it to Amazon, right? What's my 7-year plan to create that value? You need to understand that. And then how to get out, which is I just defined a strategic purchaser exit to a hypothetical Amazon, somebody like that. Well, you can't really forecast today that sale, whether is it going to be a good time 7 years from now to sell to that strategic purchaser? Well, who the hell knows, right? But you've created a direction for where you want to build your business, which is really important. You need to know where you're going and how you're creating value and for who. So I wouldn't worry at all about the macro side of this. Is it a good time? I would worry about, how can I finesse this thing? Like, how much do I need within that plan, and can I finesse it? Simple as that.
Okay. So what about common mistakes that you see in companies that do experience troubles? Because you've dealt with them before COVID, before this interesting, unique situation. Let's call it unique. And now you're dealing with companies in the moment. Do you see the companies have the same patterns, same mistakes, or you see there is something that people should be aware due to COVID again, that they need to be aware while they're trying to build business or run the business?
For 30 years, I've always told people, troubled companies are 100% of the time management failings. It's never some global event which comes and wipes you out. It's always management screwing up, and just for whatever reason, they weren't capable of dealing with the challenges that face them. There's demographic issues. The competitor ate their lunch, like whatever it is. And now I'm wrong. Now there's this global pandemic event, which came and wiped a bunch of people out. So I was prepared to accept that as an excuse for being a troubled business in February 2020 through to like September 2020. But it's been a year. It's been more than a year. If you haven't figured out how COVID is impacting your business by now,
yeah, you're
like
out.
this is on you.
Yeah.
That's not on COVID. This is
Yeah.
on you, right? And there's a lot of sympathy if you're in the restaurant business and the government keeps tricking you. I was in Toronto like 3 weeks ago or whatever. I went to Harbor 60, an amazing steakhouse. I think you've been there before, and they were open, and they were allowed to open for 3 days. Maybe it was 4 days. It was like they were told Sunday they were allowed to open, so they hired all their staff, they bought all their supplies, and just a patio. But they have a gorgeous patio there that's like bigger than their main building. They got everything ramped up, and then they were open like Monday, Tuesday, Wednesday, and Thursday. They had to close down again. And so crazy. I do have empathy, sympathy for just terrible leadership in governments, screwing with industries. But apart from that, you need to take responsibility. Is coming back to the answer to your question. Okay, troubled companies don't take responsibility. They don't put it on themselves as a management team, right? Or as a leader. The person in charge is by definition not a turnaround leader. If you meet me, it's because you're not doing the job, right? It's as simple as that. I'm the turnaround leader and you're not doing the job. You're not doing the job. You're not taking responsibility. You're not being accountable, and you're not doing the job. Turnarounds break down into two categories: balance sheets and operational. Operational means you're not making enough money. Balance sheet means you have too much debt and not enough cash flow, right, to pay this stuff, right? On the operational side, not making enough money, this comes down to people often think about revenue first and expenses second. And the formula that I try to preach is: number one, contribution margin; number two, overhead; number three, revenue. If I meet a company that's doing, well, I can pick on a company that I own right now. It used to, I won't tell you which one, but it used to do 20 million in revenue. And when I met it, it was doing 6. It was doing, now in fairness, it was doing 8 pre-COVID, and then it was kind of, now, do I walk into that company and I think to myself, if I could only do 12, the numbers look like this is pretty good, right? And that's what most people think. Well, the answer is no. What I think is, how do I make money at 5? Because I know for a fact I'm not going to go below 5. How do I take a step back, right, and restructure my costs so that I can make money at this low number and then have a good base to grow from? And the order of events is contribution margin. What is contribution margin? It's the selling price minus the variable cost. Okay, and in manufacturing, the variable cost is direct materials, direct labor, freight, maybe sales commissions, right? So if you sell something for $100 and your variable cost adds up to $60, then you have $40 contribution margin, a 40% contribution margin. You can make that 45, makes a huge difference. Make more margin on the stuff that you're selling. Number two, your overhead. Just get rid of stuff. Like, you got to cut back if you're in a troubled company, or at all times. Just take a deep dive in and try to find ways to cut your overhead and your fixed operating costs, like your real estate and people and whatever, right? Lastly, worry about growth. Every troubled company you meet, I guarantee you they're going to tell you, if I just got that big contract in, it's still coming next month, right? Okay. And then on the balance sheet side, right, you got too much debt. You don't have enough cash flow, and you need to restructure, and you need to find ways to bring liquidity in. Simple as that. But you need to do both. You need to do both if you have both of those issues. So that's what you see repetitively in troubled companies.
It's a lot of information for people to process and just go through, because I am trying to have that general discussion, because people do have a tendency of asking general questions, and like you said, it's hard to answer them in general way, and that's why I think it's.
I could give something really easy for your audience. I don't know if there's business owners in there that are struggling, whatever. If you're a troubled company and you're the leader of the business, the most important thing for you to do is to accept that this is on you. This is on you. And if what you're doing isn't working, you should do something different.
Yeah. And admitting that, I think that's the first step. Admitting that and just take charge and move.
Step number one on my top 10 list of how to turn around a troubled company, refinance a troubled company, is you have to admit you're in trouble to yourself. Because if you can't admit you're in trouble, if you think, I got a great business here, everything's going to be good, if you can't admit that you're in trouble, you can't make the hard decisions.
Yeah.
Right? You just can't. You're paying the salesperson $100,000 or $150,000, and they're bringing a little bit of business, but they're working on the big accounts, they're working on the big elephants, and they're going to come in. You're dying over here.
Yeah.
You're not, right? You think, well, I got to hold on. But if you, the minute you admit that you're in trouble, and this is, I got 12 employees and I'm not going to be able to pay them. Right. And they got families and they're not going to be able to feed their families because I was unwilling to make that decision. Until you make that mental switch, you can't make any changes. So if you want something simple that people can digest, it's on you. It's on you. Admit you're in trouble, and until you do, you're not going to fix things. If you're an alcoholic, don't they tell you you have to first admit you're an alcoholic?
Exactly. Yeah, you have to. Yeah. Yeah. Well, I guess like everything in life, it is on you. One way or another, it is. You're in charge of it. I have so many questions actually, just based on what you just shared, but I know we do not have so much time. One more question that I really want to ask you, actually. Again, it's relatively general, but I just want to know your opinion. You just touched base on manufacturing in general and the companies they're involved manufacturing. And I hear so much right now from different people. We want to start manufacturing in Canada. Canadian government wants to build up the manufacturing, wants to help companies to start. And I hear that just from my network of people, that people are considering just starting businesses and manufacturing processes of different kinds, mostly in medical, but I heard different versions of it. But I think as a general trend, do you think Canada has a good climate right now to start manufacturing? Is it true that Canada provides certain benefits, I guess, and certain help and assists companies that are trying to set up manufacturing in-house? Or as a business owner, the person who deals with manufacturing companies, troubled companies in Canada and the US, or you still think that it's maybe not the best idea right now, based on what you've heard and based on what happened last year?
I'm bullish on Canadian manufacturing. You know, we have a pretty good education system. We have a decent work ethic, depending on where you are in the country. Our labor laws are a little crazy, but they're tolerable. The problem with Canadian manufacturing is the lack of a domestic market. So you're an exporter. You just need to remember as a Canadian that you're an exporter. Okay. So at Roofers World, for example, about half our revenue is to the US. We have a steel product coming in from Asian sources, and they're hit with a duty, with the Trump duty crossing the border, which cost me 7% of my revenue last year, and is on target to be the same. Now I'm moving that production back to Canada, which will help that. I'd be smarter to move it to the US. I just happen to own the production facilities in Canada, but I'd be smarter to move it to the US where the market is. So you need to think about, as a Canadian, I think you need to think about the fact that you're an exporter, and what does that mean? And you need to think about your commodity supply, because getting the commodity in this instance would be steel, wood, plastics, that sort of stuff. You need to think about that in Canada. And you need to think about availability of capital, because we don't have a decentralized banking system, financial system. I mean, if you want to deposit your $1,000 paycheck into a savings account and leave it there, we might have the most stable banking system on the face of the earth. It's terrific.
Mhm.
But if you're an entrepreneur or a small business and you're trying to get access to capital, it's not so good in Canada, right? So we've got those problems, and then we have an okay, not awesome, but an okay tax regime right now. But where's that going? Because you have
Mhm.
gross political instability in Canada when it comes to, I don't mean political instability, that's not the right word, but you have such divergent views and really, really, really left-leaning parties that have control a lot. And I'm not trying to be political about this, but there's huge tax hikes coming down the pipe, huge tax hikes. And there's going to be an attack on corporations in those tax hikes coming down the pipe. And they're printing money like it's going out of style with huge deficits. We all get into the news and we hear about the US, $2 trillion packages and their deficits, but on a per capita basis, Canada's way worse. It's way worse. So what does that mean? Interest rates could be going up, inflation. There's all sorts of risks associated with Canadian business that you have to think about. But at the end of the day, I think there's a market for Canadian or North American made products for sure. Yeah. I think there's a market for that. My companies are Canadian made. We put a Canadian sticker on it. We're proud of that. We have a great employee base, terrific employee base, good values, good people. Like all that stuff is true about Canada. So I think those are the pros and cons.
Yeah. And I do like working with Canadian manufacturers. For me, it's also a big deal when I hear that a company is making it in-house. It gives that sense of pride. The sense of pride when you go and try to sell to a customer, and it gives you that notion, actually, we are making it. But unfortunately, it's not that common. And this is and I think it's important to talk about it, because I think many people avoid this question and avoid this discussion. But politics is interconnected with economy is interconnected, obviously, with businesses, and businesses are struggling. So and this is why I'm asking those questions.
I'll give you an example. We have this tool when I bought the roofing tool company. Mm-hmm. So we have a metal head that's fabricated in China. Mm-hmm. Okay, and this is our biggest product, probably 80% of our revenue, 70% of our revenue now, maybe. And it attracts the Trump duties selling into the US. I hope I'm not shadow banning your channel here by mentioning that former president's name, but but so we get these duties because it's made in China. So now I bought this stainless steel sink manufacturer. We own the presses, and we could make this head in Canada. So we're doing the testing on that right now. Mm-hmm. We will turn that Chinese piece into a Canadian piece. Now, the Chinese supplier is awesome. I like this guy a lot. I mean, he doesn't speak any English, so I don't really know how awesome he is. But Chinese-Canadian relations are not good. Chinese-U.S. relations are not good, and they're not going to be getting any better. Like, I think the world is fragmenting, right? And I think everybody's going back to their corners. That's, I think, the general trend right now. And so I think onshoring is a really interesting move that I'm all over. I'm all over everything that's onshoring. Yet, and so I can make this steel head in Canada in my production facility at basically the same price that I have it from China landed. Basically the same price, okay? And I don't have to spend any money on the capital equipment because I already own it. I already bought it with this company, right? So that's a good trade for me. I can onshore to this, except this Indian company came along and found us over the internet and said, hey, we can produce this for you. And we got a sample and we're testing it right now. But this whole thing may be too good to be true. They're less than half of the price that we're paying in China right now, and that we could do it ourselves in Canada, right? Which makes the whole duty issue kind of a non-issue, because the duty is a percentage and
of the cost,
right? And the base is way lower. And so it's a complicated issue. It's a complicated issue, but I'm with you. I love Canadian made, and I think there's a market for North American made. I think there's a market for it.
Yeah, but those are the great points to consider, great points to be aware of and think about, especially when people are trying to, step into this area, if they want to consider manufacturing in Canada. And what are the challenges and what are the benefits? And it's always nice to talk about it. And I really appreciate your opinion on that. Well, I know we are running out of time. I just like to finish my interviews with a little bit more personal question, of some sort. And today I actually want to ask you a very common question. People are asking me all the time. How do you deal with Zoom fatigue, and how do you deal with this isolation and talking to people over video becoming a new norm? How do you deal with that? And do you have any advice for the audience, people watching us? What can they do to make it easier on them and just to stay positive and keep rolling?
Switch up the way you communicate, right? So sometimes I don't Zoom for a whole week and we just do a lot of WhatsApp chatting. Sometimes I switch to phone calls. Sometimes we shift to Zoom. I know that sounds silly, but if you just try to switch it up and just don't accept Zoom as the new normal. I think that's because it sucks. How much would you and I, like right now, we're 3 hours apart from each other. How much would you and I rather be at Highs having a martini with a camera on, right?
I agree.
A lot more. And, I said before that Sinclair Range has always been a virtual firm, and that's true. But we also always like once a week or once every other week at a minimum, we met on Bay Street for drinks on Thursday night. We'd have dinners. We'd go for sushi or steakhouse. And there'd be this, even if you were sort of out of the downtown core in Toronto, you'd come in, we'd get your room, whatever, and we would hang out together as a firm. I'd come to Calgary, you've seen part of this. I'd come to Calgary, we'd have dinner and drinks. I do the same in New York all the time because it's really, really important. It's not the virtual Zoom fatigue that's killing us right now. It's the losing sight of that last piece, I think, that is the real problem. Don't accept it. Just don't accept it. Have drinks with your friends, like do whatever you can, and that's why I don't believe that this remote thing is going to last. I just don't believe it. I think there's going to be a hybrid, and I don't think it's going to like switch overnight. But at the end of the day, people like their big office in the sky, and they like going downstairs from the tower, and having dinner and going out with their friends and shooting the shit and all that sort of stuff. And what they don't like is sitting in their crappy bachelor apartment in New Jersey when they built their whole life to go across the river and work in the downtown core. And they lost that. They just lost that. And so don't accept it. Don't accept it. Look for ways to get together.
Thank you, Scott. Thank you. That was fantastic. Thanks.
Good.
Thanks for your time. Thanks for joining me. And I hope we will get together and have martinis together. And hopefully it will happen soon, sooner than later.
Thank you so much, Anna.